As a licensed CPA, I strongly believe that every American needs an HSA, also known as a health savings account. For one, healthcare costs are the leading cause of bankruptcy filings in the United States. This is despite the fact that 90% of Americans already have some form of health insurance. Health insurance may actually be part of the problem because most health insurance plans offered today are high deductible health plans, with the median deductible being around $2,500 or more for the average person, and some people's deductibles are as high as $15,000. This is how much money most people have to pay before their health insurance begins to cover any amount of their medical expenses. And just for some context here, keep in mind that literally half of US adults do not have enough cash to cover an unexpected $500 healthcare bill, according to KFF.org and other sources. Meanwhile, savvy taxpayers are using HSAs to not only cover health expenses not covered by their insurance, but they are also using these accounts to actually grow their wealth and minimize their taxes. You can shelter income with an HSA. You can invest with your HSA. You can grow tax-free income inside of your HSA, and you can even withdraw money tax-free from your HSA if you use it correctly. Plus, you can use your HSA to pay for a variety of health expenses, not just medical emergencies. And guess what? You can set up your own health savings account on your own. You do not need an employer to set up an HSA. You do not have to have a business to set up an HSA. And if you just watch this video until the end, you will learn everything you need to know about HSAs, from how to qualify for an HSA, all of the tax benefits, and where you can go to actually set one up for yourself. So save this video, comment below if you have any questions, and make sure you subscribe for more guidance to less stress and lower taxes. All right, so how do you qualify for a health savings account? It's actually quite simple. All you have to do is be enrolled in a high deductible health insurance plan, which most plans these days are. At the time of this video, a high deductible health plan has a minimum deductible of $1,600 for individual coverage and a minimum deductible of $3,200 for family coverage. Now, if you do not know what your health insurance deductible is, then you can easily find this on your health insurance card. Most cards will list your deductible on the front or back of it. Now, with that said, even if you do not qualify, do not be discouraged here. If you find that these benefits that I'm about to share with you are worth it to you, then you may choose to simply change your insurance plan next time around to a plan that does allow you to qualify for an HSA. Also, keep in mind that some health plans may provide an HSA to you as a feature of that health insurance policy. But even if your plan does not, that does not mean you cannot simply go down the street and open up your own HSA, which I will also talk to you about as well. So that is how you qualify. In short, you just need a high deductible health plan. Now let's talk about the benefits of using a health savings account. So let's just follow the flow of money here as I walk you through these benefits. So let's say you have $8,000 sitting in your bank account right now, earning no interest, growing no appreciation, generating zero dividends, and saving you no money in taxes. So you decide to move that $8,000 into a health savings account. At this point, you have just created a $8,000 tax deduction for yourself, which is the first benefit of using an HSA. Your contributions are tax deductible. As of 2024, you can put about $4,000 in your HSA as an individual or $8,000 as a family. And if you are in a high tax bracket, then this could easily save you a couple $1,000s in taxes alone. But this is just one benefit. So let's move on. Okay, so now you have $8,000 sitting in your health savings account. And let's say at that point, you have no expected health expenses. So you decide to invest the money inside of your HSA into other assets. Most HSAs have investment features, allowing you to invest in various assets, like stocks, bonds, index funds, and so on. And when those investments earn income, that income is not taxable to you, which is the second major benefit of using an HSA. Your investment earnings grow tax-free. Usually, when you earn investment income, you pay tax on that income. If you sell stocks at a gain, you pay capital gains tax. If you earn interest or dividend income, you report it and pay taxes on that when you file your tax return. But if you earn this type of investment income inside of your HSA account, you will pay no tax on it. But stay with me here because it gets even better. So let's go back to our example. Now, hypothetically, if you invested $8,000 per year with a 10% rate of return, you would have over $1.4 million of wealth inside of your HSA thanks to our friend compound interest. But realistically here, there will likely be interruptions in your growth rate, especially if you are using your HSA to pay for qualified health expenses, which perfectly leads me to the next major benefit of the HSA. When you withdraw funds to pay for qualified health expenses, those funds come out tax-free. Now, this is huge, folks, because almost no other government-sponsored account allows you to have all of these tax benefits inside of one vehicle. For example, with a Roth IRA or 529 plan, you can earn tax-free income and withdraw money tax-free, but you do not get a tax deduction when you put money in it like you would with an HSA. You must use after-tax dollars for those types of accounts. And with a traditional IRA or 401k, you do get a tax deduction when you put money into it, but you pay taxes later when you withdraw money from it. An HSA is one of the only accounts that gives you a tax deduction for putting money into it and tax-free income when you take money out of it. But the only condition is that you must use the funds for quote unquote qualifying medical expenses. So what exactly are qualifying medical expenses? Well, according to the IRS, medical expenses are the cost of diagnosis, mitigation, treatment, or prevention of a disease. They go on to say that these expenses must primarily aim to alleviate or prevent a physical or mental disability or illness. So of course, this would include expenses like physical exams, doctor visits, dental visits, x-rays, medicine, eye treatments, and so much more. But then there's other things like, can you use your HSA to pay for a gym membership, chiropractic treatment, massages, and so on? Well, IRS publication 502 explains the scope of medical and dental expenses you can write off, and I will link it in the description of this video for you to reference because they provide a long list of eligible expenses. So let's pull it up and look at a few expenses here. So it does turn out that you can use your HSA to pay for chiropractors, psychologists, and therapists, as well as quote unquote weight loss programs, if those programs are meant to treat a disease like obesity, hypertension, or heart disease. They do state that you cannot include your entire gym membership as a medical expense, but you can include separate fees charged for specific weight loss activities, which I find to be a little interesting here to say the least. But the bottom line here is that if you do not want to pay any tax when you take money out of your HSA, then you must use the account for qualified medical expenses, which most people will have at some point in their life. And with health insurance deductibles rising and Americans falling into bankruptcy due to medical debt, using an HSA sounds like a strong, if not logical, solution. So then, where exactly can you go about setting up an HSA? Well, many people think that they have to own a business to set up an HSA or have it set up as a part of their health insurance policy. But you can actually set up your own HSA for free at a variety of financial institutions. Bank of America offers a free HSA program. Fidelity offers a free HSA, as well as many other financial institutions. All you have to do is qualify by having a high deductible health insurance plan, and you should be good to go. This HSA will act as a savings account for all of your future health expenses, which also will allow you to grow more wealth and pay significantly less in taxes. If you want a tax plan that is guaranteed to reduce your taxes, then just apply to become an exclusive client of mine today at mycpacoach.com. Thank you for watching.